Leave a Japanese house empty and neglected long enough, and the government can raise its property tax bill to 6 times what it was, without you selling it, renovating it, or changing a single thing about how you use it. The trigger isn't a new purchase or a new law passed against you personally. It's a formal notice most owners never see coming, and by the time it arrives, the 6 times number is often already locked in for that tax year. Japan's vacant house crisis isn't really a supply problem. It's a maintenance problem. Owners who inherit or abandon a house often have no financial incentive to demolish it, fix it, or sell it, because doing nothing has historically been the cheapest option. Since December 2023, an amended national law gave municipalities a direct tool to remove that incentive, aimed specifically at the houses dragging down entire neighborhoods. Broken windows, unlocked doors, structures that are visibly falling apart. Normally, land with a residential building on it gets a major tax break. The taxable value is cut to 1/6 for the first 200 square meters. It's the single biggest reason it's historically been cheaper to leave an old house standing than to tear it down. Under the 2023 amendment, a municipality can formally designate a neglected property a poorly managed vacant house. Once that designation is issued, the property loses the 1/6 discount entirely, and the land portion of the tax bill jumps back up toward its full assessed value. In practice, a jump of roughly 6 times the previous bill. Municipalities aren't inspecting every empty house looking for a reason to escalate. The designation follows visible neglect, broken windows, doors that don't lock, a structure that's visibly deteriorating, or a property that's become a safety or pest concern for neighbors. And it isn't instant. The city issues a formal advisory first, a warning that gives the owner a real window to fix the problem, demolish the structure, or otherwise show the property is being managed. The 6 times bill is what happens when that warning goes ignored, not a surprise penalty for owning an old house. This matters most for exactly the kind of buyer this channel talks to. Someone about to take on a genuinely neglected Akiya. The lesson isn't to avoid a rundown property. It's to treat basic visible upkeep, boarding a broken window, keeping the door locked, clearing overgrowth, as part of the closing process, not a someday project. A buyer who secures the property immediately, even before renovation starts, avoids ever giving a municipality a reason to send that advisory in the first place. None of this is designed to punish ordinary owners. It's designed to end the version of vacant house ownership where ignoring a falling down building costs less than dealing with it. If you inherit, buy, or already own an aging Japanese house, the rule is simple enough to plan around. Keep it visibly secure and maintained, and the 6 times number never applies to you. Ignore it for long enough, and the letter eventually comes. If this made Japan's empty house market a little clearer, subscribe to Akiya Handbook, the channel that explains how Japan's cheap houses actually work, honestly, and without selling you anything. There is also a free guide waiting in the description, the Akiya Buyer's Starter Guide, How to Buy a Cheap House in Japan Without Getting Burned. 11 chapters on the truth about so-called free houses, the hidden costs, and who should not buy. No hype, and completely free. The link is below. Thanks for watching.